The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, just when we thought the grain markets were seeing a sizable rally throughout much of this past week, Friday came along and took a lot of that momentum out of the market as we saw some selling pressure led by soybeans and bean oil to the downside as some of the weather risk premium was potentially taken out of the market ahead of the weekend. Not a bad day in the livestock trade, though, Friday, and the Dow Jones up sharply as we got some more inflation economic data out Friday morning. Here to walk through the week of the trade with us, recap Friday's action and more. We thought, why not, instead of one, how about two analysts with us here today? Joining us, Connor Bridgman and Brady Huck with advanced trading at ATI Pro Media. Connor, welcome back to the show. How are you, buddy?
I'm doing good. Thanks for having me, Jesse.
You bet. Brady as well. Good to see you again, Brady. Thanks for being here with us.
You bet. Good to see you, Jesse. Thanks for having us.
Well, guys, I take a deep breath here. Friday, not a fun day in the grains. If you're a stock trader, if you're watching the Dow, you're happy. And if you're a livestock guy, it was an okay end of the week. But man, oh man, here we go. More volatility, these markets. I mean, Connor, you think about it, just here's a classic weather market, right? Taking profit off the table ahead of the weekend.
Yeah, it sure feels like it. The price action starting Monday, because here's the thing, we're still up on the week, Jesse, if we want to spin this as a positive. Yeah. But, man, it felt like every day we were opening higher. We saw a little bit of a sell-off, but it would have been really nice to break through that 423, 425 D's corn. We didn't see it happening, and now we're seeing the sell-off. That GFS model, I think, got a little bit wetter. We're going to take some profit taking right now. We got corn down 10 cents and soybeans down 27.
Just a tough way to head into the weekend with all of that pressure. And it's something that, the wheat market as well. We got some pop in spring wheat this week. And maybe, Brady, I know you're in Kansas. Some of that harvest pressure from wheat maybe subsided in the markets early in the week. But then, kind of the same thing here too, just with some of this weather risk coming off the table, the wheat market's down double digits as well. And just your assessment of some of this grain trade here this week and wrapping things up, Brady, just kind of a tough way to end the week, wasn't it?
Certainly, yeah. It gets old talking bearish markets. Everybody wants to talk a bullish market. Those are the fun ones to deal with. But I think we had the Wheat Quality Council tour up in the Dakotas, and they found some record yield potential up there. Here in Kansas, we're 30, 45 days past the bulk of harvest. So we've got those storage charges starting to hit commercial elevator, commercial stored bushels, and guys are, moving some grain, and, and you've got the August options expiration kind of hitting us as well. So does everything come to a head here Friday, and maybe we get past the weather weekend, the models change, and I guess we can hope for a better week next week, right? Certainly.
Yeah. Hopefully. Well, I want to throw this idea at you guys, and let's talk about this a little bit. I've made this comment a few times this week, and so I will ask the two of you. It's felt like these grain markets, largely, it's been a giant game of chicken. You have funds that are at or near record short on one side. You have commercials and end users on the other. A lot of farmers stuck in the middle. I think a lot of farmers have taken advantage if they were needing to catch up on some sales. They did so on this rally this week, but largely, you mentioned options expiration coming here, Brady. I mean, what do you guys think about that? It's just felt like this giant game of chicken here for the last month or so.
Certainly has, yeah. I mean, we look at the fund short position in corn, and seasonally it's a big short position, but the farmer has a bigger long position on the grain side of things. So what's the back to the game of chicken of who's going to budge first, who's going to break first? And I think we need to see some demand. We had some of those flash sales pop up; those were great to see, but. Yeah, the farmer's sitting on a good crop, and we need a couple dominoes to fall to get some U.S. export business in the peak of demand season coming up here.
Yeah, Connor, what do you think?
Absolutely agree. We got to look at that farmer long. What's the statistic where on-farm stocks, it's the highest we've seen since like 87, since the 80s, right? And so if you're talking about a game of chicken, I know at least in the Illinois farmer, if we're sitting on old crop, if we've got it in the bin, if we've got it stored at the elevator, we're more than likely not going to roll that into new crop. And so if it's a game of who's going to break first, it sure feels like the next 30, 60 days, we're going to have to see some old corn come to market just to get ready for this potential huge crop that we're going to see, right? Especially in Illinois. I know, Brady, I'll let you talk Kansas. I know we've got some heat coming, but my gosh, we've got potential for some big yields in central Illinois, and I think potential across the Midwest too, Jesse.
Yeah, I would say so. It feels like that the weather positives have outweighed the weather negatives here all season long in the US. And so maybe let's put our risk management hat on a little bit here for farmers thinking about their grains and just, broadly. I mean, tools in the toolbox. We got a lot of them. I think some farmers are really tightening their corn belt, so to speak, here, trying to manage their risk and manage their bottom line, and they're worried about making some sales at these prices. But I know at some point you got to do something, because I think doing nothing in these markets could be disaster right now. What do you think?
Yeah.
Go ahead, Brady.
Yeah, this is a market where you're going to have to make decisions at some point, and I would rather be controlling when I make that decision versus being forced to make that decision when I need the cash flow or when I absolutely need to move the grain. So I think being proactive in this market, and Connor and I've talked about that on our Live at 9 show a lot, about being proactive with our marketing and using these opportunities, these short covering pops to make those decisions. But we got to keep the flexibility open. This market, things can change going forward. That funds have a big short position. You get a couple of those dominoes to fall across the world. Ukraine corn production, I think, is 70% has been drier than normal the last 90 days. You get a couple of these problems to stack up, and next thing you know, we got some demand coming to us to lift these markets and scare those shorts out. That's my hope.
Yeah. And I think about this too. And Connor, I'll add this on. You don't have to sell the farm all at one price. I mean, you could step into this and make some incremental sales, but just doing something, and getting started, especially if you're way behind here, whether it be old or new crop marketing for that matter. I mean, you don't have to do everything at one price level, right?
Nope. 100% agree. And my focus this week has been harvest is going to be here before we realize it, right? 45, 60 days out. If we don't have a place to put this crop, or we know some's got to move to town, let's start making some of those decisions now, because in this lower price environment, we really need to minimize unnecessary costs. So if we can go ahead, we know it's got to move. We need to be looking at maybe making some sales if we're behind on some stuff that needs to move. We know how to re-own it if we want to stay in the market. And so making sure we're cognizant of that, and getting the harvest plan in place now, because there's nothing worse than it being October 15th. The elevator's calling you. What do you want to do with this grain? Are you going to store it, or are you going to sell it, while you're trying to think about something else and worried about going to the next field? So start getting those plans now. And the other thing I'll say is, 6 months ago, I know we were looking at break even. We were using the APH, and 6 months ago, closer to 460, 470 corn, we were still probably below break even, depending on your operation. Now, if we start having an honest opinion of what the potential's out there, we need to reassess that number, I think, and make sure, we're not getting that analysis paralysis and not doing nothing in these low prices.
Yeah, some good thoughts there to think about for sure. We're talking with Connor Bridgman, Brady Huck from Advanced Trading and ATI Pro Media. They're joining us here today for a roundtable discussion on market talk as we recap the week of the trade, Friday's action. Guys, what do we make of the Dow Jones up over 700 points on Friday? Wild end of the week there, despite all the risk off pressure in the grains and a mixed tone of livestock. Here's the stock market screaming higher. PCE data out Friday as well. I mean, either of you have any thoughts on a wild day higher in stocks Friday?
Go ahead, Brady.
Yeah, this stock market, macro market headlines, just all over the place here this week, and volatility abound. I think, the funds, you look at the funds and where do they want to park their money? Where do they want their risk exposure going into the next few months, the next 6 months, the next year, election stuff coming up, drama, war overseas, and, terrorist type activity everywhere. Where do they want their money, and where do they see the best return or the safest assets? So you see these flights to safety happen, and maybe some disappointing earnings. The consumer confidence, that's one of the biggest concerns I have going forward, is the health of the consumer going forward. How long can we kick the can, dip into our savings account, extend the credit card debt? And then you flip that over into beef demand, and you look at the box beef prices and maybe some resistance there. It's a little dicey going forward, guys. I'm nervous about things going forward from here.
Yeah, well, and talk about that livestock market a little bit, Brady. I'll stick with that since you brought up box beef demand. I mean, it feels to me like that futures market is getting a little bit toppy here once again. We're bumping up against some resistance levels we've hit before, and seasonally, this isn't a great window for meat demand until we, get to Labor Day again. It's kind of our next big milestone here. I know things have been relatively good for cattle guys, especially feeding cheap corn for feeders, but this cattle market's got me a little concerned right now, Brady.
Yeah, I think, Tommy talked to us a little bit this morning, and he's made a comment about, the cowboy being a little overconfident here with prices. And we're all so much aware of the supply situation, the lowest beef cow numbers inventory in 70 years. That's a headline that stares in front of us every day. But what we sometimes ignore is that demand side and the consumer and, their pocketbook. And I can't afford many steaks. I can't afford to eat steak 5 nights a week. You might be able to, Jesse. Connor might be able to, but I can't, certainly.
No.
But yeah, the lean beef market's been propping up the boxes, and with cow slaughter coming up, we'll get more coal cow type decisions here as we get into the fall. We'll get some import pressure on that type of market. It concerns me a little bit to squeeze the packer, and the packer margin would just kind of all trickles downhill. And the cow calf guy, he's looking at the prices, looking at the market's got a great market to go out there and protect right now. But I just don't know how long it lasts here, guys.
No, I don't either. Well, and Connor, I'll maybe bring this back to you for kind of some overarching comments here. I wonder what you're hearing when you talk with your producers, whether they're grain or anything with livestock, or just, we look at this outside economy and, big up day on Friday in the Dow, for instance, but it just feels like there's a lot of unspoken uneasiness out there in farm country right now. You got John Deere laying off so many global employees, more of those layoffs here this past week. And it just feels like there's a lot of unspoken uneasiness out there. Are you having some of those conversations with your clients right now, Connor?
Absolutely. It's a lot of, there's a lot of negativity when we go from that high price environment, right? Input costs for 2024, they didn't dip as much as they never dip as much as we want to. And we're going to this lower price environment. It's a lot of negativity, especially when it feels like it's like catching a falling knife, right? The opportunities we had to sell in that $4.95 range, they were very fleeting, right? And in hindsight, it was very quick. And if we missed it, we missed it. And so it's very negative. It can be very negative. We've got a big implement dealership here in Assumption, Illinois. And I got to tell you, the lot is full. There's a lot of, we got a lot of stuff sitting, much more than we saw a couple of years ago. So I think it's a testament, right? The ag space, the lower price environment, it trickles down to other economies. Jesse, you mentioned it. Agco, we saw them make a sale. They sold, What did you say? All their grain department, right? GSI's in my backyard. That's part of it. And so I think that's just a testament to the farm economy and the environment we're in.
Yeah, that AGCO headline, we were talking about that off the air. I think that kind of flew under the radar of all the layoffs from Deere here this past week. To be honest, it was something that was kind of missed in the news cycle. I guess, guys, as we kind of wrap things up here today, I'd love both of you to maybe share some perspective or reiterate for listeners and folks tuning in on YouTube as well, just some reminders they need to think about here when it comes to their marketing and their overall bottom line of their operation as we work through this down cycle. I mean, what would you tell folks? Brady, if you want to start, what would you really, share with folks, or make sure that you want to really drive home a point to them right now?
Yeah, no, I think this is an environment where you're very tempted to pinch nickels, dimes, and quarters, but these markets, they can move dollars. They're very volatile. There's plenty of room left to the downside on these. The market doesn't care about your break even at this point. You planted the crop, and we've got the production and supply. The market doesn't care about your break even at this point. So we don't paint yourself into a marketing corner here, and don't expect the unexpected. It's going to be volatile, I'm afraid, for the next few months, year, and buckle up, boys. Buckle up.
Yeah. Connor, how about you?
I'll reiterate the same. When we see these lower prices, sometimes it's easy. Maybe we'll commit some bushels for the 25 crop to add some pennies to our 24 crop. And so we've seen that time and time again historically, that's usually not a smart decision, right? Especially when we're going out 14 months, a couple of years. Tomorrow's not guaranteed, right? Usually betting on volatility in these grain markets is the right call. And so that'd be my cautionary tale is don't try and add pennies. Let's make sure we're keeping the dollars in mind. And that being said, right, let's get the 24 crop handled. And then we need to start looking at the 25 crop. Brady and I, advanced trading, we're proponents of being proactive hedgers. And so Brady and I talked yesterday just about how can we start looking at that 25 crop if we see some good prices.
Well, and if you're a baseball aficionado as well, singles and doubles could win a game.
Amen.
Don't have to hit a home run every time. That's I think that's another way to kind of summarize what you guys are both saying as well here right now. And you mentioned it earlier, Connor, I know, and Brady too. You guys do your live at 9 every weekday morning with ATI Pro Media on YouTube. Folks can check that out. It's on socials as well, stream there live, and a lot of great stuff you guys are doing. Appreciate you being with us here to wrap up the week of the trade. We'll let you both go, and we'll talk to you again real soon. Thanks so much, guys.
Thanks for having us.
Brady, Huck, Connor Bridgman with us from Advanced Trading and ATI Pro Media. That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.